Hello everyone, how's it going? In this video, we will talk about Palantir, trading under the ticker symbol PLTR. The financial market has been going through volatile swings recently, and one of the most talked about and sought after stocks has been Palantir. So in today's video, we will go through what the company does, what it represents, the recent price actions, the company's financials, and my recommendation regarding if it is a good stock to buy. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description section, as every help is greatly appreciated. During Tuesday's trading session, Palantir has been able to increase by another 2.2% in the stock market, continuing its ascension that began just a few weeks ago. The stock has been sitting on the $16 line, and is likely to continue on for the foreseeable future. This really shows how Palantir remains a very popular stock that sits highly in people's mind and consideration, and that as soon as there are opportunities to have a positive narrative, Palantir will be able to make it to new highs. In the long run, Palantir is a company that has demonstrated its capacity to attract capital, regardless of the market situation. That being said, we should also wonder what should have happened if Palantir didn't present the financial results that they did for the first quarter of 2023. I mean, is that going to change our current narrative? Is that going to make is that going to cause that a lot less people are going to be buying Palantir? It's an interesting question to ask ourselves, and to be honest, I think that we all have a certain answer in our mind. I think that the truth is, Palantir is a stock that needs slightly positive news for the narrative to gather momentum in order to encourage interest and higher price points. Another point to make here is the assessment of where Palantir can reach in terms of price level before the current ascension finishes. Given the current state of the capital market, I personally believe that around $25 would be a reasonable region for pullbacks to start happening. Now, let's also take a look at the technicals of the stock. The trading volume of Palantir has recently been around 113 million shares versus an average volume of 115 million shares. Over the previous 52-week period, the price fluctuated between $5.84 and $17.16. The volume of shares traded tells us how many shares have been bought and sold at any given time in the market, and if there's enough liquidity to support a trading strategy. If the float is very thin, this means that it's very easy to influence the market for sure, but the low liquidity could also mean that the demand is limited. When we compare the current volume against the average volume, there might be the possibility for trend reversal or breakthrough if the difference is very large. For instance, if the stock were to break through, the current volume would be significantly higher than the average volume. The market cap of Palantir is considered at around $33 billion versus around $15 billion in the enterprise value. In other words, its goodwill, its brand power, is having a huge impact on its valuation. As we compare the current price to the historical price fluctuations, the stock is 77.3% higher than the 1-month low, 120% higher than the 3-month low, and 173% higher than the 52-week low. On the options market, which often gives us a hint on the market sentiment about where the stock price is likely going to head next, the implied volatility is around 73% versus a historical volatility of 83%. The put-call volume ratio is currently around 0.35. This is normal for many stocks who tend to have a higher put option as people choose to invest into long positions and buying put options to hedge the risk. The most recent volume of options traded is 403,000 contracts a day versus the average volume of 584,000. In terms of open interest, there are approximately 3 million contracts of open interest with, compared to the 30-day average of 2.5 million contracts. In terms of the shareholder structure, Palantir has a sizable percentage of its shares in the hands of institutions, to the extent of 33%, likely as a result of short selling of its outstanding shares. The biggest shareholders include Vanguard, Renaissance, and State Street. Typically, it's best to see some institutional participation when holding a stock for the long term, because it does offer a layer of stability and a token of reliability in the medium to long term. It means that the market is confident that it will deliver value in the long term, which is an important factor to consider for investors. I personally believe that a minimum threshold should be around 25% to 30% of institutional ownership, for which Palantir does surpass. And there may be many exceptions to this rule, of course, since many great companies don't really have that many institutional investors and still manage to thrive in the market. So the current short volume is insignificant in my opinion, at around 8% of the total float, 60% of it coming from the dark pools. Usually, if the short interest is beyond 15%, then we can say that there are institutional positions to take in to short the stock, and that there would be potentials for a short squeeze. So there's that. With that being said, I don't think that 8% is necessarily reason for concern. If we look at the long-term price action of Palantir, we must ask ourselves whether this company will have a place in the economy of tomorrow. We know that the company will not be profitable for another few years. That much has already been priced in. We also know that Palantir is in a highly sophisticated area of the economy, and that it aims to become the analytic dashboard of the wealthiest entities around the world. The true debate is whether Palantir itself can stand the test of time, and whether the market will believe in its potentials to become something bigger and more critical. Palantir fell by almost 80% from the peak of the share price, from $35 down to $7.28. Much of this is due to the overall market trend, and the rest is caused by doubts on the company's growth potentials, as well as the business model to work with government agencies. Now, personally, I believe that Palantir has been testing its bottom for some time now, as the downward slope stopped the progression for more than 6 months. Ever since the price reached about $8 back in May of this year, the rest of the downward slide is probably caused by the habit of just going lower by default. Does this mean that the stock will reach new high very soon? Maybe not. But on the other hand, I do believe that Palantir will have a place in the future and that its price is due for some significant change as well. Given that it's been down by so much, the only logical direction that it's going to go is going to be up. Palantir Technologies is a software company specializing in providing big data analytics and management solutions to various industries, including finance. The company's flagship product, Palantir Gotham, is a powerful platform helping organizations to make sense of their data by providing advanced data integration, analysis, and visualization capabilities. One of the key features of Palantir Gotham is its ability to integrate data from a wide variety of sources. The platform can work with structured and unstructured data, including text, images, and videos, and can also handle data in multiple formats and languages. This makes it an ideal solution for organizations with data spread across multiple systems and departments. It also provides advanced data analytics capabilities, including natural language processing, machine learning, and predictive analytics. Those features allow organizations to uncover hidden insights and patterns from the data. Another key advantage of Gotham is the ability to provide secure and role-based access to the data. The platform uses a combination of technical controls and policy-based access to ensure that only the authorized users can access the sensitive data. This is very important for organizations in the financial sector, which are subject to strict regulatory requirements for data security and privacy. Palantir's solution is widely used by government and intelligence agencies, as well as by major financial institutions, consulting firms, and other kinds of organizations around the world who can afford it. This is due to the platform's ability to help these organizations to make sense of their own datasets and to identify patterns and trends that could optimize their decision making. Now, as we look at Palantir's financials, the first thing that is noticeable is the positive gross margin. Above all else, this is a decent reminder that the company's core business seems to work. It is true that revenue has been growing slowly, which sparked some worries from investors, but the fact that the gross profit is positive means that the main issue is the scalability and the diversification of its operations, which may solve the problem once they reach a critical number of clients. We gotta remember that Palantir's revenue managed to grow despite the fact that there is a de facto recession in many economies around the world, meaning Palantir's clients are relatively robust, which can be a good thing for the company. The cash flow reports suggest that despite having a net loss due to the fixed costs, Palantir can self-finance significant portions of its operations with a positive free cash flow at the end of each quarter ever since Q1 of 2021. This means that the pressure of Palantir to go through rounds of share dilutions would be relatively low, which is a good thing for the shareholders. Another significant aspect to consider is that its liabilities seem to be under control, currently around $933 million, which is mostly constant and slightly decreasing compared to the previous quarters. This is also very reassuring and suggests that Palantir is also keen on making sure that they have a low leverage, decreasing their solvency risks. There's about 33% of institutional owners amongst Palantir's shareholders. So what this means is that Palantir does have a significant endorsement from the money managers, but they are largely outnumbered by the retails, and that there will be a significant chunk of people going in and out of the stock based on the market movements and the short-term price actions. It would also suggest that Palantir is good for investment, but if we do so, we must be aware of the people who want to profit off the swings, meaning we need to ignore the short-term volatilities. One key behavioral difference is that institutionals can afford to wait longer for their profits, whereas the retails tend to come in and out in very short periods of time because they want to make quick profits. Also, institutional shareholders tend to be more active in corporate governance. They are more likely to vote on important matters like mergers and acquisitions, compensations, appointments, and so on. They're also more vocal in their opinions, whereas the retail shareholders, they tend to be more silent and more passive in front of different decisions to be made. Currently, there are around 4.2 million shares shorting against Palantir. Some believe that there might be potentials for a short squeeze, because those 4.2 million shares would need to be redeemed at some point, and right now it takes about 4 days to fully recover. With that being said, I believe that Palantir currently has a certain volume of short positions because people truly believe that the company has a lot of headwind against it. I don't believe that they are concerted, and they're also not entirely institutional. It's important to note that a short interest is not a guarantee of a short squeeze, but it's a metric worth monitoring for the investors. It's also worth considering that the short sellers may have valid reasons for their bearish sentiment, and a short squeeze may not happen regardless of how many stars are being aligned. My recommendation is to hold on to your existing Palantir position for the time being, and eventually add new shares if you still have allocation room left. I believe that we can continue to increase the exposure up to like $20 or so. I would recommend to commit between 3 to 5% of your portfolio in Palantir, and would also recommend to split the allocation in batches of 10 to 20% at a time over 3 to 6 months so that you can purchase more in case of retracements.